All right, everybody, welcome back to TalkTickers, the show that breaks down earnings calls so you don't have to.
That's right.
Today, we're diving deep into Sleep Number's latest report.
Their fourth quarter and full year 2024 earnings call just dropped, and
Yeah, there's a lot to unpack.
yeah, it's an interesting one for sure.
So Sleep Number, they're known for their smart beds, adjustable firmness, all that.
Right, sleep tracking, all those kind of bells and whistles.
But the big takeaway right off the bat, revenue's down.
Yeah, for both the fourth quarter and the full year, actually.
Which, in this economy, not entirely surprising.
No, not at all. Lots of companies are feeling the pinch.
But here's the thing, even with revenue down, their profitability actually jumped up quite a bit.
That's right. Their adjusted EBITDA and gross margin both saw some pretty significant increases.
Yeah, year over year.
Yep, even beating out some of their own internal targets, which is pretty impressive.
Definitely. And they also managed to shrink those operating expenses.
Right. Size things down a bit.
Exactly. But then they also acknowledge that things are still pretty tough out there in the mattress market.
Yeah, that demand environment hasn't really eased up.
Not even going into early 2025.
Right. It's a tough time to be selling big ticket items.
So let's break down these numbers a bit further, starting with the fourth quarter.
All right, sounds good.
Their net sales came in at $377 million.
Which is?
That's a 12% drop compared to the same period last year.
Okay,
And it even fell a little short of what they were internally projecting.
I see.
Now, for the full year, net sales totaled $1.68 billion.
Okay.
That's an 11% decrease from 2023.
So a similar trend there.
Yeah, demand was down overall, they said, by a pretty high single-digit percentage for the whole year.
But like we mentioned earlier, even with these sales dips, their profitability metrics actually improved.
Oh yeah, let's talk about that.
Correct.
So their adjusted EBITDA in the fourth quarter, it soared by 43% year over year, reaching $26 million.
Whoa, that's a pretty big jump.
Yeah, and for the whole year, adjusted EBITDA came in at $120 million, right on target with what they had recently guided for.
So they're hitting their targets, just not on the revenue side.
Right, and the gross margin story is even more striking, I think.
Oh yeah, definitely.
During that fourth quarter, it climbed all the way up to 59.9%.
Wow.
That's the top end of what they expected.
Okay.
And it's a 3.3 percentage point increase from the year before.
All right.
For the whole year, gross margin reached 59.6%,
Okay.
which is a 1.9 percentage point boost compared to 2023.
That's pretty substantial.
And here's the kicker. That full year gross margin improvement is almost double what they initially aimed for at the beginning of the year.
Oh, wow. So they really exceeded expectations on that front.
Yeah, it seems like those cost-cutting measures they've been putting in place are really paying off,
That's got to be a good sign for them.
especially in this environment.
Yeah, you got to be lean and mean to survive sometimes.
So let's talk a little bit more about how they've been trimming down those operating expenses.
Okay.
In the fourth quarter, they slashed them by $28 million compared to the previous year.
Okay.
And over the entire year, operating expenses were down a whopping $88 million.
Whoa, that's a pretty significant reduction.
And this is even before factoring in any restructuring costs.
So their cost-cutting initiatives went above and beyond their initial plans.
Absolutely.
That's impressive.
Yeah, it really speaks to their focus on becoming more efficient.
Right, and it looks like it's having a real impact on their cash flow as well.
Oh yeah, for sure. They generated $4 million in positive free cash flow for the full year,
All right.
which is a massive improvement.
Okay.
$70 million swing compared to the year before.
So despite those top-line challenges, they're making some real headway in terms of boosting profitability and managing their cash.
Yeah, absolutely. They're playing a smart game there.
But of course, we can't ignore the context here. They're operating in a really tough industry right now.
That's true. They specifically mention how challenging the demand environment has been in the mattress sector.
Yeah, throughout 2024, really. And it's not just Sleep Number.
Right, it's the entire industry.
Yeah, U.S. mattress sales volume hit its lowest point since 2015.
So what do you think are some of the biggest factors behind this slump in demand?
Well, they pointed to a few things. Low consumer confidence is a big one.
Yeah, it makes sense. People are hesitant to make big purchases when they're uncertain about the future.
Exactly. And then high interest rates aren't helping either.
Oh yeah, those have been putting a damper on the housing market.
Right. And historically, low housing turnover means fewer people are buying new homes.
And when people buy new homes, they often need new mattresses.
Exactly. So that's a big hit for the industry.
And then you throw in persistent inflation and just general economic anxieties, and it creates this perfect storm where people are really tightening their belts when it comes to discretionary spending.
And a mattress, while essential, can often feel like a discretionary purchase.
Especially if you're trying to make your old one last a little longer.
Right.
And it sounds like things might have even taken a turn for the worse recently.
Yeah, they mentioned a pretty sharp drop in consumer sentiment,
Oh, wow.
starting in late January of this year,
Okay.
with further declines in February.
So things are getting even tougher.
It seems that way. Yeah, they said this slump in confidence is even impacting online searches for mattresses and sales during events like President's Day.
Which is usually a big one for furniture and bedding.
Huge.
Yeah, so not a good sign.
No, not really.
They specifically mentioned a significant drop in how consumers feel about buying durable goods right now.
So it's not just mattresses, it's a broader trend affecting anything that's meant to last a while.
All right, so facing all these headwinds, what are some of the things that Sleep Number is doing strategically to navigate this difficult period?
Well, one of their big focuses has been continuing their operating model transformation,
Okay.
which is something they've been working on for a while now.
So what are the main goals of this transformation?
The big ones are to lower their fixed costs, improve margins and cash flow.
Yeah, those sound like solid goals in this kind of environment.
Absolutely, and ultimately to build a more financially resilient business.
One that can better withstand these economic ups and downs.
Exactly.
And we're definitely seeing evidence of that with those reduced operating expenses.
Yeah, for sure.
Were there other key strategic adjustments they made?
Yes, they strategically dialed back on their media spending.
Okay.
Reduced it by 18% in the fourth quarter compared to the year before,
Okay.
and by 9% for the entire year.
So they're being more cautious with their marketing dollars.
Yeah, they're really prioritizing profit protection in this weak consumer environment.
It's a choice between trying to drive top-line growth at any cost or making sure the bottom line is healthy.
And in this climate, it seems like they're opting for the latter.
Makes sense.
You can't grow if you're not profitable.
Exactly.
So they're being strategic about where they allocate those resources.
So how are they working to generate demand if they're pulling back on those big marketing campaigns?
They're really focusing on a more targeted and efficient approach. So they're using data analytics to try and identify consumers who are most likely to be interested in their products.
Okay.
And then they're serving up personalized content and messaging.
So a more personalized approach.
Exactly.
And they're also tapping into their existing customer base through their Smart Sleeper loyalty program.
Right. Building on that relationship with people who are already familiar with the brand.
Because happy customers are often your best advocates.
Exactly.
Word of mouth marketing is powerful.
Absolutely.
And in their physical stores, they've been working on strengthening their in-store sales approach.
Okay.
They're doing this through a recertification program for their sleep professionals,
I see.
aiming to provide a more tailored and effective customer experience.
So making sure those sales interactions are really top-notch.
Yeah, really knowledgeable and helpful.
Providing that extra level of expertise and guidance.
Okay, so a more focused, data-driven approach. It's all about being more precise with those efforts.
Right. Maximizing the impact of every dollar they spend.
And they also made note of how certain product lines are performing, right?
Yeah, they highlighted the strong performance of their climate series.
Oh, the climate series. Those are their higher-end smart beds. From
Exactly. The ones with all the bells and whistles.
Temperature regulation, sleep tracking, all that good stuff.
Yep, all the fancy features.
So it seems like their premium offerings are still resonating with a segment of the market.
Yeah, and those higher priced products tend to come with higher margins.
So that's good news for their profitability.
Absolutely. Gotta love those high margin sales.
But they did acknowledge that their lower priced product lines are facing more pressure.
Yeah, that makes sense.
When consumers are tightening their belts, those budget options might be the first to go.
Especially in a category like mattresses, where you might be able to make do with what you have for a little longer.
And then there were some changes to their physical store footprint as well, right?
Yes, they reduced their total store count by 5% year over year in the fourth quarter.
Okay.
This is part of their ongoing evaluation of their store network.
They're optimizing, making sure they've got the right presence in the right locations.
Exactly. No point in keeping underperforming stores open.
Makes sense. And they also seem to be taking steps to manage their debt, right?
Yeah, they proactively amended their 2025 financial covenants with their lenders.
Okay.
This gives them more flexibility given the tough industry conditions.
So they're basically giving themselves a little more wiggle room if their results don't quite hit the original targets.
Exactly. It's a way to manage expectations and avoid any potential issues with those covenants.
And they also said that exploring options to restructure their debt in 2025 is a priority.
Yep, they're looking at ways to strengthen their overall financial structure.
Smart move.
Yeah, especially in this environment.
And then, of course, there's the big news about the leadership change.
That's right. Linda Finley is taking over as the new president and CEO.
Okay.
Starting April 7th.
So she'll be leading the next earnings call.
Yep, it'll be interesting to hear her vision for the company.
Definitely. A new CEO often brings new ideas and strategies.
Yeah, it'll be a fresh perspective.
And then there's the whole tariff situation they're having to deal with.
Oh yeah, those recently enacted tariffs are adding another layer of complexity.
It sounds like they're primarily affecting the materials they source from Mexico.
Yeah, which represents a significant portion of their material costs.
About a third, they said.
So it's not a small issue.
No, it's definitely impacting their bottom line.
Yeah, they're having to figure out how to manage those increased costs.
And they said they're considering pricing actions.
Right, but they're going to be careful about it?
Yeah, they have to balance the need to protect their margins with the potential impact on demand in this already sensitive consumer market.
It's a delicate balancing act for sure.
One wrong move could really hurt them.
Definitely. And interestingly, they decided not to give specific financial guidance for 2025.
Oh, yeah. What was the reasoning behind that?
They attributed it to the upcoming CEO transition.
Okay.
They want to give the new CEO time to assess the situation.
Makes sense. Let her get settled in and form her own view before putting any hard numbers out there.
Exactly. It's a smart move to give her that flexibility.
And it sounds like they're prepared to continue facing these difficult conditions.
Oh, yeah. They emphasize that they have contingency plans in place to protect both their margins and cash flow.
So they're not just sitting back and hoping for the best.
No, they're actively preparing for different scenarios.
That's reassuring.
Yeah, it shows they're taking a proactive approach.
So when we step back and look at the big picture, what's your main takeaway from this earnings call?
I think it's a story of resilience and adaptation.
Okay.
They're facing some pretty serious macroeconomic challenges.
Yeah, things are tough out there.
But they're taking steps to control what they can control.
Focusing on profitability, managing expenses.
Exactly. They're playing a smart defensive game.
Positioning themselves to come out stronger when the market eventually turns around.
Exactly. They're weathering the storm.
And that improved gross margin is a real bright spot.
Yeah, it shows that their cost management initiatives are working.
And it might also suggest a strategic shift towards those higher margin products.
Like the climate series?
Yeah, catering to those consumers who are still willing to spend on premium products.
Smart move.
But of course, that lack of specific guidance for 2025 does create some uncertainty.
Yeah, it's the unknown.
But it's understandable given the CEO change.
Right.
They're being cautious.
And the fact that they're actively exploring debt restructuring shows that financial stability remains a top priority.
Yeah, they're taking steps to shore up their balance sheet.
Good move.
So what do you think are the key things that investors should be watching going forward?
Well, keeping an eye on those big economic indicators is crucial.
Like consumer confidence in the housing market?
Right. Those are going to be major drivers of demand.
And their own internal data on organic interest in the mattress category?
Yeah, that can give some insight into the overall health of the market.
And of course, we'll be eagerly awaiting the next earnings call to hear from the new CEO. All right, well, that wraps up our in-depth look at Sleep Number's latest earnings call.
But before we go,
We've got to do our This Is Not Financial Advice segment.
of course, where we let our imaginations run wild with some trade ideas.
Right. Completely hypothetical, not to be taken seriously.
Purely for entertainment purposes.
So given Sleep Number's focus on that higher-end consumer and the success they're seeing with their climate series, contrasting with the broader pressures on lower-end discretionary spending.
I've got an idea.
Hit me.
What about a pairs trade?
Okay, I'm listening.
Go long shares of a company that specializes in luxury outdoor adventure experiences.
Okay, so like high-end guided trips, exclusive resort stays.
Exactly, those bucket list type experiences.
Right.
And simultaneously short shares of a major budget airline.
All right, so you're betting that the affluent consumer is still spending, but the more budget-conscious traveler is pulling back.
Exactly. If that divergence in consumer strength continues, the demand for premium experiences might hold up while budget air travel could face headwinds.
I like it. A play on where those discretionary dollars are flowing.
Right. And for another audacious idea, building on Sleep Number's proactive exploration of debt restructuring
Okay.
and that near-term flexibility they've gained by amending their bank covenants.
I'm intrigued.
Look into the publicly traded debt of a regional mall REIT.
A REIT, yeah?
One that has a portfolio of properties in relatively stable, higher-income suburban areas.
Okay, so you're thinking those malls might be more resilient to economic downturns?
Potentially.
Okay.
And ideally, this REIT would also be facing some financial pressure, maybe even exploring its own restructuring options.
All right, so the thesis here is that they could stabilize and eventually turn things around.
Right, driven by a more resilient tenant base and proactive management of their debt.
But this is a highly speculative play.
Oh, yeah, for sure. Any debt restructuring can have unpredictable consequences for debt holders.
Not for the faint of heart.
Definitely not. This is for those who really understand the intricacies of fixed income markets and real estate finance.
All right, well, those are some bold ideas.
As always,
Just a reminder, this is all purely hypothetical, not investment advice.
do your own research, folks.
Absolutely. All right, so to wrap up, Sleep Number's navigating a tough environment, but they're doing a lot of things right.
Yeah, they're playing the hand they've been dealt.
Exactly. They're focused on profitability, managing costs carefully.
Yep, and they've got a new CEO coming in with a fresh perspective.
So it'll be interesting to see what the future holds for them.
Definitely.
What do you think? How do you see Sleep Number's strategy playing out?
And what about the broader outlook for the mattress industry?
Let us know your thoughts.
We'd love to hear from you.
Join us next time on TalkTickers for another deep dive into a crucial earnings call.
We'll be breaking it all down for you.
See you then.
Bye, everybody.